Hey guys, welcome to the podcast. Joe Wiggins here, and I'm joined today by the one, the only Mike Moses. Mike is a franchise owner for Goosehead Insurance, right, Mike?
Yes, sir.
And
Absolutely.
just like myself, a mortgage broker, Mike is an insurance broker, and now more than ever, guys, that makes a huge difference. One of the things from my chair that I've seen and I've gotten calls on, and my existing client base is struggling with, is they're getting calls saying, "Hey, your homeowner's insurance premium is going up," or maybe they're not even getting that call. They're getting a call from their servicer saying, "Hey, you're about $1,800 short in your impound account because your homeowner's insurance policy quote doubled and we paid it." And if you're like me, you get those policies in the mail, right, Mike? And I know the insurance companies send them. And if you're impounded, like a lot of people are, you just kind of put them to the wayside, right? And
Yes,
maybe
sir.
people don't pay attention. Now their payments jumping considerably, and they're freaking out because they're making these phone calls and they're learning that homeowners insurance premiums are really kind of cranking up all over the state. And so that's why we have Mike on today. He's going to give us some insight that he shared with me at a recent lunch that I found incredibly valuable. And I think you guys watching this and subscribing to this will benefit from it. And so, Mike, if you want to give us a little bit about yourself, like how long you've been in the business and what
Absolutely.
led you to insurance.
Yes. Mike Moses, Goosehead Insurance. I started my career in May of 1982 with a captive company called Allstate Insurance. Over time, as progressed, I was a agent, and in 2015, I saw what the captive companies were doing to their clients. A real quick scenario here. I had a client that had a home and two cars, came up to me in regards to asking to get a quote because he bought a motorhome. And I turned it into our underwriter, and the underwriter says, "We're not interested in that $250,000 motorhome." So he went down the street to a broker, and the broker said, "I'll write the motorhome, but I need your cars and your home." So after I got off the phone with him and told him I couldn't do the motorhome, I got a fax stating that he wanted to cancel his house and his two cars because the carrier that he went to needed to have it to bundle the rate to get the underwriter to approve it.
Right.
So I saw the handwriting on the wall of the captive companies being your big ones like Farmers, State Farm, and Allstate. I looked into becoming a broker in 2017. I joined a company called Goosehead, based out of Westlake, Texas. I am a franchisee. I bought into the company, and I've been selling insurance since 1982. And in hindsight, the other side of the fence isn't always green. But in this case, the grass was greener on the other side of the fence. I basically have written more business in half the time that I have with a broker because of my options are a lot more lenient and a lot more available than I did with my career with Allstate Insurance. A little bit of history here. It's franchisee, Goosehead Insurance. We are the big umbrella, and each one of the prongs off the umbrella is a company. Back in 2016, when I started 7.5 years ago, we had 93 homeowner insurance companies that we had opportunity to write through. And right now, I believe because of the industry and the changing of the government, I've got 11. So that many people have either stopped writing or completely left the state in regards to not writing insurance. And we can talk about that because I know you're going to ask the next question in regards to a couple of bills that have passed through the government legislation.
Yeah, exactly. Because I was really shocked to learn about that. And I will tell you guys, Mike has saved our customers thousands and thousands of dollars. Whenever we process a loan, we always quote it out with Mike, just as, even if nothing else, like a double check against maybe what a customer thought was a good deal, or maybe a good coverage or a good premium. And it it really kind of blew my mind because when you told me the same thing, that there's basically 11 insurance companies riding in the state of California right now, when before there was 9x that easily or more. That's pretty crazy. And this is kind of stemming from a bill that was passed, right?
100%.
So tell us a little bit about that and how this was really brought about by a legislative change.
Okay. During the 70s and 80s, the insurance companies were mandated and governed by a outlet or a program called ISO, Insurance Service Organization. They were the criteria of what the government mandated the insurance companies to do in regards to getting a rate for a particular risk for your property.
Okay.
The ISO governed what they call a protection class. And each one of these acronyms you can look up on Google search. So, protection class is your water sources, your lakes, rivers, streams, towers, fire hydrants, fire station, and the communication between the responding party to where the property is. It's a weighting scale between a point evaluation between 1 and 10 points. If you're in the middle of the city, Ontario or Rancho Cucamonga, your protection class is a 3 or 4. If you live in Yucca Valley, or you live in Cabazon, or you live in the outskirts of Lucerne Valley or Barstow, you could have a protection class 10. That could and would have affected your rates based on the protection class of 1 through 10.
So
During
basically
the
like the
late,
availability of water, some or
correct,
and or systems and capacity to put a fire out should a fire start, basically, right?
correct.
So they started
So
scoring it.
yeah. So
Okay.
during the late 90s and early 2000s, the government added a second layer because of the fires that were happening in the state of California. And they put this fire agency together, another acronym that you could look up. And the fire agency is utilizing the spacing between where the house is and when the last fire occurred over the last 10 years. So you got another point scale between 1 and 10 based on how you were in regards to proximity of what has happened in past. So they always say history repeats itself. And if there was a fire there 5 years ago, the likelihood of a fire there again is probably pretty high. So in the late 2000s, somewhere around 18 or 19, the government mandated that the insurance companies refile what they call their terms and conditions, adding a third layer called SHIA score, SHIA, Special Hazard Interface Area. So now you have 3 criteria that make a scale between 3 and 30 points. And the higher you are on your point scale, the harder it is to get that risk approved. So you have 10 points, 10 points, 10 points. So this last SHIA score is basically called Special Hazard Interface Area, which is your home. 1-story, 2-story, end of a road, dirt road. Are you on an uphill? Are you on a downhill? Are you on an upslope? Are you on a downslope? Which way there's a wind blow? So all these factors go into a rating factor between 3 and 30 points, and the risk goes into a database, and the database runs the longitude and latitude of the property, and it goes into a scoring system, and every house has its own individual scoring pattern between 3 and 30 points. During that term and condition process of what the government mandated the insurance companies to do, the government mandated that they turn in their requirements of what the maximum point evaluation that the insurance companies were mandated to take on a particular risk. State Farm wouldn't take over 17. Nationwide wouldn't take over 18. Now, I don't know the actual point scales on every insurance company, but I was just using that as an example.
Yeah.
So if you had a house that was a 22, you would have to find a insurance company that would take the risk of a point 22 on the evaluation 3 criteria scale. Most insurance companies, the big ones, 98% of them, don't go over 17 or 18 points. So if you're at 21, the likelihood of you finding something available for that risk is pretty slim to none.
So if you're like, let's say you're a potential homeowner, like it's almost to your advantage to look up. Now, this data is public. So if I wanted to find out, hey, what's my is ISO score, what's my chia score, what are those? I could talk to somebody like you, or I could look that up before maybe purchasing the home, obviously, right?
Yeah, you would have to call a licensed agent and they could put your address into the computer system and they can tell you if their carriers that they have the contracts with would utilize that scoring system to get them a particular policy for the property that you want to have insured.
Got it. And so, like, based on our conversation we had at lunch, it sounds to me like the state is also implementing some things that has basically driven carriers out, that works similar to like a bank as they relate to maybe FDIC, right? If a
Right.
bank
Yep.
has $1 million on deposit, they'll only let you lend, let's say 3.5 times that, right?
Yep.
Which really could
So
limit the
basically
smaller
in
banks, right?
Yeah, it basically in July of 2021, state legislation put a bill together called AB 38. AB 38 is better known as what they call a defensible space law. The defensible space law now mandates that the insurance companies have clearance between a three-zone perimeter around your property: zone 1, zone 2, and zone 3, and each one of them has a minimum clearance for each one: 30 feet, 200 feet, 500 feet, 1,500 feet. So AB 38 is known as the defensible space law. That was governed by the insurance department commissioner, passed by the governor, signed into law. Most insurance companies sent their activists or their lobbyists up there to see what they could do about getting it reprieved, because there was a lot of other sections that went onto it. And I can go into that in about 30 seconds. But basically, AB 38 put a stranglehold on the insurance companies and it mandated them to use this new law. Most of them didn't want to abide by it. The big one, State Farm, said, "Hey, we've been in business for 100 years. We have a $24 billion book of assets that we don't think we need somebody telling us, daddy looking over our shoulder, how to do our business. We can take care of ourselves." The government said, "No, you have to abide by the rules and regulations." So they basically said, "No, we don't." The big player who had a really good policy called Amgard Brookshire, owned by Warren Buffett,
Mhm.
August 1st of 2021, basically pulled his plug, told the government to fly a kite and said, "We're not going to do it." And
Yeah.
he basically has started a non-renewal process of every Brookshire Amgard policy in the state of California. So that's a big ticket. It took some time for the other ones to catch on. And as you have a pizza with 93 players and you have players that are dropping off, the piece of pizza is still the same size, 33 million homes, but now you go from 93 to 70 to 30 to 15 to 10 that are available to write the home insurance. Now the government now mandates that the insurance companies have a clause called reinsurance. Reinsurance is the protection that you have if you go to the bank and you have more than $250,000. You want to take that out because you're only protected to that 250. So this reinsurance is a clause or a requirement that the insurance companies have in regards to meeting their criteria of their debt to income ratio. So if you have a company that is $250 million and you have a company like State Farm at 200 or $25 billion
Right.
and they're non-renewing their book, those people have to go someplace.
Yeah.
So they're going to this smaller player, but now their book of business is growing, which means they have to buy the reinsurance from the government to protect their assets, which is basically a tax that the government is putting on the insurance companies to write business in the state of California. And most of the insurance companies are saying, we're not going to do that.
Yeah, because it's crazy, right? I mean, like, imagine, bureaucracy creating problems like this, right? And the buzz phrase, at least in our industry, was always, well, we didn't mean for that to happen. It was an unintended consequence of some really crappy idea, right?
Mm-hmm.
And essentially, it sounds to me like what the state is doing is saying, hey, we realize you're an insurance company, but we know better than you do. You've been an insurance company for hundreds of years. We, the state of California, are not in the insurance business, but take it from us. This is how we should roll on this, right?
Yep.
And who pays? The consumer.
Consumer.
The
Yep.
consumer always gets the shaft. It doesn't matter if it's the mortgage business, kind of what's happening with this NAR settlement, in real estate sales, or this stuff here in insurance. I really appreciate you clarifying that,
Yep.
because I think a lot of people's tendency, and it's very easy for a politician's talking point to be, oh, those darn greedy insurance companies,
The big
they just want to,
corporations.
pad their profits, and this is all about profit, and they're making so much money off of you poor people. And really the poor person that's paying this cramped premium, in some cases double or triple, right? They have no clue that it was the state that's supposed to protect them that's actually creating the bureaucracy that's creating the damn problem, right? Um,
It basically
is there
started a
something
couple of
like,
years ago. Yeah, it
yeah,
basically started a couple of years ago when we had the fire in Paradise.
got it.
So there was 23 or 2,600 homes that burned,
Yeah,
and in that 2,600 homes or whatever it was, I believe it was somewhere around 30% of the homes insured by one insurance company. So when those homes burned down to the ground, uh, the asset value of what they had to their front door premiums and their backdoor claims didn't match. So the
yeah,
government had to step in and say, hey, we need to help because that company is going to go insolvent. So we have to pay premiums out of our tax dollars or whatever it is comes from the kitty or the big pot of gold to
right.
help offset the cost for the fires that happened in Paradise. So now the government went in and intervened and said, you need to meet your certain guidelines, and here's our criteria, and this is what we want to have. And AB 38 was passed, and the insurance companies had no choice
Yeah.
because of
Um,
one bad player doing something and over saturating a market with a particular risk that basically devastated the company. And it took a big player to offset the cost of a little player. So it evened everything out. But now we're in a position to where insurance rates are now 100, 200, 300, 400% higher today than they were 5 years ago.
Yeah, and really, if I'm thinking of this right, they've really kind of forced these smaller players that agreed to stay to become the big players, whether they like it or not, because the consumer really doesn't have any other option, right? And so they're in effect, they're creating their own problem. They're perpetuating the problem. Is there any lobbying, or is there anything that a consumer could do or get behind, maybe like a current push to change the way that this is happening?
I think the lobbyists have already started that. And
Okay.
Dr. Laura, the insurance department commissioner, put a memo out either March 20th or March 30th saying that he was going to look at it somewhere down the road. But the earliest that he could get involved or looked at it would be the middle to end of 2024, beginning of 2025. So we're basically sort of kind of stuck with this for at least a couple of years.
Yeah, and I've got some clients in Florida. We helped out in Florida, and I know I had one client there, $1.2 million value of his home. The annual HOI premium was $18,000.
It's
And
crazy.
so I think that's kind of a perfect example. And they have hurricanes there, right? I mean, I get it. We have earthquakes and fire, and we all know that if you really want to be covered in an earthquake, you got to have that insurance too, right?
Yeah.
Speaking of like riders and that sort of thing, what we've seen a lot of is in the areas where it's really difficult to get a policy, there's something called a California Fair Plan that is required. How does that work? Is that like a supplement to the main policy?
Great question. So in 1997 or somewhere around there, the government passed a legislation called the Fair Claim Practice Procedure of the state of California. And I believe it is a requirement that all 16 named perils which are your losses that you have on your home, have to be afforded to every insurance company. So you have 16 named perils. You can look that up on Google search.
Yeah.
Of the 16 named perils, you have to have on your HO3, your homeowner policy. Because of this AB 38 that is passed, there are certain companies that will write a homeowner's policy, but they're going to exclude 3 of the named perils. That would be your fire, vandalism, and your mischievous mischief. So under that 16 named perils, 13 of them would be under what they call a DIC, or a difference in conditions policy, and the other 3 through the California Fair Plan, which is called the California Wraparound Fair Plan. So you have 2 policies, double or triple the premium to cover your 16 named perils, because you have no options, because 92 or 93% of every zip code in the state of California has now been mandated as a high fire zone.
That's crazy. I mean, that's really, really crazy. And I've always thought we have a pretty good insurance commission in the state of California, as far as a lot of like state agencies go. And I really think once this gets out to the masses and people understand, this is not insurance company greed. This is basically, in my opinion, state mismanagement or misguided legislation, I would say. In the mortgage business, we're no strangers to seeing that. But for a lot of people, this is there's a cumulative effect to this, especially if you're trying to buy real estate right now, or if you've recently purchased real estate. As we all know, rates went from, in the 2s and 3s to in the 6s and 7s. And so affordability is already pressed. A lot of people that we've helped over the last 2 years were barely able to get in to where it fit into their budget. And now even an additional $200 a month is like, it's top ramen time, baby. You know what I mean? Like, we're not getting the cheese on the cheeseburger.
Nope.
I mean, it's nickel and dime time. And I really think that you've outlined with a great amount of clarity and very succinctly how this works. I can tell you, I know you've saved our clients a lot of money. Guys, if you're watching this and you need some advice, I can tell you that Mike is without a doubt one of the best people you could call. And he's extremely knowledgeable. Mike, how would people get a hold of you? How do you prefer people reach out to you if they're watching this and they're saying, man, my homeowner is just cranked and they're not going to reinsure me or whatever. I need to know what my options are. I'd like to talk to Mike. How do they get a hold of you, man?
Email address, michael.moses@goosehead.com. CHAELMOSES @goosehead.com. Name, reply to the email, name, cell phone, and the address of the property. I can take it from there.
That's awesome, guys. And if you have my contact information, you can also hit me up and I'll connect you with Mike on an email intro or text. Mike, we really appreciate your time,
Absolutely.
man, and your expertise.
It's a domino effect no matter what you do.
Yeah.
So you have a client that's trying to downsize. Grandma and grandpa want to downsize from their 3,000 to a 1,500 square foot house.
Yeah.
And they want to move a little farther out. All of a sudden, they put an offer on the house, and the person that's selling the house is moving to Tennessee. The person in Tennessee is moving to Michigan. So now mom and dad want to downsize from their 3,000 square foot house because the kids are gone, and they go to a 1,200 square foot house out in Beaumont or Banning or Cherry Valley or South Riverside. And they get stuck into a fire zone, and their 1,200 square foot home is going to cost them $4,500 a year in insurance. And dad says, hey, I'm not paying $400 a month for insurance, which means now the person who's selling the house can't move to Tennessee, and the person in Tennessee can't move to Michigan. So the domino effect has basically affected the whole entire real estate market, which infects you, the loan officer who's doing the loan on the homes, and it affects me, the person who's trying to write the home insurance, because now the movement isn't there like it used to be, because the inflation, interest rates, and the cost of insurance has basically stifled some people because they don't want to pay $500 a month for a house insurance policy.
Exactly. And I'm just thinking out loud, right now, because we know most of the agents that we work with, they're primarily buyer's agents. A lot of them list properties for sale too. But I think insurance premiums and knowledge of that is a huge differentiator. If you're a real estate professional, you really need to know this stuff and connect with somebody like Mike or with
Mhm.
Mike,
And the
who
hard
could
part
even guide
is
you on that.
the hard part is the real estate agent is good at what he does. He
Yeah,
sells properties.
sure.
Uh, and most of these disclosure forms that now come out and saying this is not in a fire zone and it's not in a high file wildfire area. But when it comes to it, it's not the real estate agent, it's not their disclosures, or it's not the city saying it's not in a high fire zone.
Yeah,
It's government law, government intervention, AB 38, and AB 38 directs the insurance company to say you can do it or you can't do it.
right.
So do your
Yeah,
due
I'm just
diligence.
thinking, at a time where maybe a buyer's agent is really trying to express to a consumer, maybe this is why you should choose me. Maybe this is why I'm worth the commission that the seller's potentially going to pay me, right? Um, this is huge
Yeah,
because a lot of people say, oh well, maybe I want a house in Rancho that has a total score of 13 with
right.
lower premiums. And what does an agent do? Well, you can't, that's really not in your affordability range. So let's go look at houses in Victorville or Hesperia or in the outskirts of San Bernardino, Riverside County,
Hmm.
where you might be dealing with a 30 score, and that extra couple $100 a month, $400 or $500 a month,
Makes a difference.
yeah, it makes a difference. And maybe it was smarter for you to stay in Rancho or Ontario, right?
Absolutely.
So I think a smart realtor would be looking at this stuff too, I guess is my point.
Hmm.
And
I
kind of
have a few
preempting
real
that.
estate agents that I do work with, and
Yeah,
when they get somebody that is ready to buy a house as a buying agent, they call me on the phone right away, and
yeah,
they say, "Mike, I'm in escrow on this property. I don't know if the customer's reached out to you, but can you send me a proposal on this house?"
yeah.
Because a lot of people, what do, Joe?
They
They
wait.
wait till the last minute and they're in escrow and they're
Yeah,
5 days before they close.
yeah,
And you say, "Hey, I'm ready to close your loan, but I need an insurance policy. Who's your agent?" And now they're running rampant to try and find something that's affordable for them. So I always say, start early.
yeah. Well, and guys, I want you to know for the last year and a half, this is literally the first thing we do when we get a contract. We automatically email Mike the details of the property and get a quote, because we've definitely had, we used to tolerate maybe a customer that was like, oh, no big deal. And obviously they're unaware of all this stuff with SB, was it SB 188?
AB 38.
AB 38. Geez, I
Yeah.
had it all. AB 38. And they're unaware, like a lot of people are. And at the last minute, they get hit with the tsunami, and so would we. And so we decided to just eliminate that a long time ago, and preemptively get the quote just to make sure that it's not going to mess with debt to income ratios, and that, we don't ever want our clients. And I know you're built the same way, Mike. We don't want any bad surprises. We want good surprises. So, excuse me. Yeah.
You okay?
So, yeah, yeah,
Okay.
wrong. Oh, yeah. So, with that said, guys, Michael.Moses at gooseheadinsurance.com.
No, Michael.Moses at goosehead.com. No insurance.
Goosehead.com. Okay.
Yes, sir.
Guys, and if you need Mike's contact info, you can also reach out to me and I can send it to you as well. So, Mike, as always, brother, appreciate you, and thanks for taking time out today.
Not a problem. Thank you
All
very
right.
much.
My pleasure. See you soon.
Take care. Adios.
Bye.